Good morning, everybody. I'm Kathy from Mobile Home Loans for You. I've been specializing in mobile home loans on leased land for about 13 and a half years now. I've been licensed as a realtor, broker, starting in 1999. I've done regular loans as well. I guess what I really want to do is I know a lot of you know a lot about regular loans, so I'm going to do some comparisons to see the differences. And a few tips that you need to know so when you're talking to your clients that you have some basic information. Let's start with the term of the loan. Most loans are going to be for stick built 30 years. For us, if they're leased to land where you don't own the land beneath you, the max we're going to do is 25, where some lenders will only do 20 years. So their difference there, 20, 25 years versus a 30-year loan. Now for us, if you have a land and home, let's say private land, or in a park with a small HOA, as long as you own the land, I can do a 30-year term. For us, we have programs starting as low as 5% down. There's no PMI and there's no prepayment penalty. So you don't have to worry about having 20% down to avoid the PMI. Now, back when I first started doing this, we couldn't do 1960 to 69. We could do 1970 and newer. But if you were 70 to May of 76, we could have to do 35% down, even with excellent credit. Well, nowadays that's all gone. Over I think the last 5 to 6 years, it went from 35% down or not doing them to this. You can do a 1960 mobile home all the way to brand new for only 5% down. So it's more dependent now, not on the age of the property, but we're going to be looking at, can they afford it? Do they have a good credit score? Do they like the park? Now, I've done one probably about 9 months ago that was a 1957, but it was a double wide in a great park that they like, the lender, and it was completely remodeled. Everything inside was like brand new. So there's that. As far as programs, we don't have anything for I-10 right now. When you first come over here, you get an I-10 number, so that way you could pay taxes. Well, and then the back end of that is you need a social security number to be able to get a job. So anyway, so we don't do that, but the next step is going to be to have the words on your social security card for work authorization only. I've got one lender that will do that. So that's the next step from going from an I-10 to a social security number. The differences between a mobile home loan and a manufacturer basically is going to be a few things. Starting out with the age of the property. They consider a HUD home manufactured June of 76. Not the first sale date, but when it was manufactured. It doesn't matter how great it looks, it's either a pre-HUD or a HUD. So June of 76 and newer, it's going to be your HUD homes. Now, most lenders either want it June of 76 or newer or 20 years or newer. They want it to be on a permanent foundation with a recorded 433A and C, which obviously means that you own the land. So as far as doing those, we do a land and home one. The lenders that I work with, there's only a couple that do them. And so their departments are going to be a lot lower than it would be for our chattel division. So it does take 45 to 60 days on average to close one with land and home. But the good news is we can do some that other lenders can't if they're manufactured. For example, you found a 1965 home, I can still do that with land and home. So if you find something 1960 to May of 76 and your regular manufactured home lender says that's just too old for us, it's out of our criteria, or it's not that 20 years or newer, that's when I come in play and then I can do it. Interest rates. Our interest rates are going to be higher than the regular ones. I think, what are they going for now? And they're sixes right now, sevens. Well, for us, I think the lowest we have, like putting down 50%, excellent credit 800, we're probably like 8.5% for 25 years. So there's that difference too, but it's not really as big of a difference as it was a few years ago when people were getting twos and threes and we were still, sevens and eights. So ours have gone up a little bit. As far as getting the listing, some hints that I want to give you guys, make sure to go directly to the park manager. They might ask for a copy of the listing agreement. Sometimes they do, sometimes they don't. You want to make sure that you have the park rules and regulations so that you know everything from, what color you can have your fence to how big of a dog you can have. Can you do emotional support dogs? Yes, of course. So you want to make sure that your pet can follow you into the park. Because if, they're more than 20, 30 pounds in most parks, they're going to say no to to a dog unless it's a service animal. Um, and then just make sure you use a really good escrow company like this one here because they specialize in mobile home loans. You don't want to go to an escrow agent that doesn't have access to HCD. And for some of you who don't know what that is, basically it's kind of like our DMV for mobile home titles. That's where all the mobile home titles get transferred at. And if you don't have a really good relationship with them, know how to hold title, it's going to be really hard for us to close. But yeah, definitely use Pro Escrow. Trying to think if there's anything else. Do you guys have any questions about anything I've talked about so far?
You guys have any questions?
Down payment assistance?
Yeah, down payment assistance.
No, not for mobile homes on leased land. Now, you might be able to find some if they're a HUD home and they're a newer home, and that would go back to a manufactured home lender again, because they won't lend on something where you don't own the land for the down payment program. So that's something that, yeah, we don't have. But we do have 5% down. The money can come from savings, 401k, or a gift from a family or friend. I actually had an employer one time give the down payment for a long-term employee. They did the down payment and the closing costs and got them into a mobile home. It was leased land.
What about credit? How was the credit for the buyer?
Okay, so we are a lot more lenient than perhaps the park's gonna be, which is why we don't order the appraisal until we know we have park approval, totally cleared income, and any other thing that we have to basically order the appraisal. Make sure they have the home inspection, but let's say we have equity base. So 580 to 599, most likely you're gonna have 35% down. If it's below 580, most likely you're gonna get declined. Now, I've seen a couple of 560s I've gone through at 35% down. People know that their credit score is no matter what the reason why they got there. So when you offer them 35% down versus being told no, a lot of times they do find the down payment. And then let's say we go from 600 to 619, we're going to be looking around 15 to 20% down. If you had a bankruptcy or a foreclosure in the last 5 years, most likely going to be 20% down. So let's say we get somebody at a 580 credit score and they're all approved. Now talk to the park, find out what their credit criteria is. They might say, no, we want a 640, 660. So they might decline them based on credit score alone. So definitely check with the park to make sure what their credit requirements are as well. And then when you go in, you want to make sure to ask them how long of a process will it be. Let's say my client comes in, they're going to do a first interview, number one. They're going to come in with many of their family members as possible. They prefer that. Hear all the park rules and regulations. They go over with them what financials to bring in, which are very similar to what I would ask for. And then they send them home with the application. They return with it. And then they give them their financials, like their pay stubs, W-2s. And then sometimes it could be 3 days to get an approval back. Sometimes it could be 2 to 3 weeks. So you definitely want to check with the park manager, find out about how long is their timeline to get approved. Let's see, for us, for financials, it's pretty easy to get approved. We're going to ask for W-2 employees for one recent pay stub from their current employer. The last 2 years W-2s from 22 and 23, we don't need tax returns. If you're Social Security, disability, anything like that, pension, we need your award letter on their letterhead from this current year stating how much money they get per month. The last 2 years, either 1099s or W-2s, and then one recent bank statement showing all deposits. So for example, Mr. Smith comes in and he's retired, but he's got 3 sets of income streams. Well, he would write on his application for employer is going to be retired. Down below, we're going to itemize. Number one, Social Security, what they get on their award letter. Number two, pension, what they get on their award letter before any kind of deductions like health or anything else. So we're going to be using it because we can gross it up 125%. Basically, what that means is, let's say Social Security on your award letter gives you $1,000. We can gross it up 125%. And there's another lender that will do 130, but let's do 125%. We're actually saying that you are making 1250 because it's not taxable income. So your income for that would be 1250. And the same thing if they had another one, had another pension for 1,000, that's another 1250 instead of 1,000. So we do gross that up. Do you guys have any questions regarding that?
No, I have two questions and then I'll point out to you guys.
Sure.
Debt to income?
Yeah.
Okay.
Okay, so the DTI we're looking at for the top, and our top is gonna be a little different than other ones. It's gonna be principal, interest, taxes, insurance, and space rent or HOA. We always have to count the space rent or HOA. So if you have a really large space rent of 3,000 versus one for 1,000, you're gonna afford a lot less price for the mobile home than you could, or the loan amount. So kind of keep that in mind. A lot of them are 31.45. I got some that are 31.49. Some are very strict on the front end. You got to use 31% of your gross income. Doesn't matter if you don't have any debt. But one lender, 21st mortgage, to let us go 49% in the back end. So basically, if you have no debt, no car payments, no credit cards, no student loans, nothing, we can use 49% of your social security income grossed up, 125% for your front end. So let you use all of it. So it was really a good program if you're on a limited income and you don't have debt. This is great because you don't have to worry about that. Did
Okay,
you have
we
another
have-
question?
Yes, what was your question?
On financing, what about the co-ownership of the family member, like a son and daughter, or supporting from the son and daughter? Because my buyer is a little bit lower than the required amount of income from the
So you want to know
association.
about co-borrowers?
Yeah, co-borrow or co-ownership.
I want you to make sure that we're talking about the same thing. We don't allow for co-signers. We do allow for co-borrower. And the basic difference on that is going to be a co-borrower has to live in the home with the borrower. A co-signer is they're not going to live there. They're just trying to sign, and we don't do that. We want to make sure that people actually living in the home can afford to live there. You don't want to be so heavy on your housing that you can't eat, you can't pay your electricity. So no, we don't do co-signer programs, but we have something that's kind of like a co-signer, but it's not. It's called a buy for program. It goes both ways. I've seen children buy their parents a social security home. I've seen parents that have a good amount of money who've bought, and let's say a college student, someone starting out, they've done the down payment or bought it for them. So, so if it's a buy for, mom and dad will be the borrower and co-borrower, and then they will have an occupant application. It will be, let's say, the daughter. The daughter is going to be living in the home. So only thing we're going to collect from her is a quick application. We are going to run her credit to make sure that she doesn't have a foreclosure with 21st mortgage. It's the only one that will do a buy for loan that I have right now. So once we've clarified that, that's all we need from her. And then the park has to be okay with it. Now I always tell them, tell the park it's not an investment property, because it's not. Your relative's gonna live there, and because they're looking at owner occupancy just like they would a HOA. They want to make sure that it's mostly primary residents living there. Most parks are not going to rent out a mobile home. I mean, every once in a while you might find someone that says, yeah, okay, we'll let somebody rent it out, but for the most part they won't. So what's going to happen is she won't be on title, the daughter. Mom and dad will be on title, and all three will be on the lease agreement saying that they can live there, because they have to be in the lease agreement even if they don't live there. Because let's say if they wanted to and they're not in a lease that for a home that they actually own, that would be a problem. So daughter not on title, daughter not on loan, daughter only on lease agreement. Mom and dad have to put down 20%. No matter what their credit score is, 20% down for a buy for or a second home. So if they had a second home, let's say, I live like 200 miles away and I want a mobile home that's closer to the beach, for example. Well, 20% down, second home, as long as you're within ratios, we can do that too.
Okay, my question was appraisal. Do you do appraisals?
Absolutely. Appraisals are done on both chattel, where you don't own the land, and when you own the land with either a small HOA or on private land. As far as that goes, it's going to be $450. It's paid directly to the appraiser that the lender chooses. And then if it's land and home, I think it's up to like $750 right now. If you're doing land and home together, but just chattel, it's $450 on average. Once in a while, we'll find someone that has a little bit lower of a rate, but typically it's $450. And as far as the payment, we have to have impounds. Our lenders insist upon it. It's not, would you like to pay your tax insurance separately or include it in your payment? They want you to include your payment. So They're gonna pay 1 year in advance for taxes, insurance, and then they pay the appraisal fee directly to the appraiser the lender chooses. So basically, all they're coming in with is gonna be the down payment, taxes, insurance, and the appraisal. Everything else we can finance. For example, for 21st, whether you go direct to them or you come to me as a broker, it's gonna be the same exact fees. Processing fees, finance, escrow fees are financed, lender fee, the HCD title fee is financed, and then the $8 flood cert. All that is a report making sure that we're not in a flood zone. If we are in a flood zone, then we're gonna need fire and flood for the insurance on the home.
I also have a question about if the appraiser goes and there's repairs and the seller willing to give credit, is there any like requirements or policies about that? Credit?
Kinda yes, kinda no. They are allowed to give a seller credit all the way up to all the closing costs, even the ones that are financed. So let's say, just use a round number, they had $4,000 in an out-of-pocket closing cost that they can't finance. They can use all of that and anything that's not financeable, like taxes and insurance. So you could, legitimately do a $5,000 seller credit, but it's gotta use only towards closing costs. No cash can be given out inside of escrow, outside to either seller or buyer, if that makes sense.
Yes, okay, so we have a few questions.
Do you have a
Okay.
non-qualifying loan?
No qualifying loan, do you have one?
No, we do not. We don't have stated income and we don't have bank statements. So getting self-employed people approved can be very difficult if what they do is they write a lot of their expenses off, or some just don't claim it. Well, if you don't claim it and it's cash, we don't do bank statements. So they did those in my first years when I first started doing it, the first 2 or 3 years. It's been at least 10 years we don't have that program, and they were finding a lot of self-employed people were going into default and they were trying to curb that. So now it's just all full income. They have to show their last 2 years' tax returns, all pages, all schedules, signed and dated. And then what we do is we take the last 2 years and we average out what they make after all their expenses. So it just depends on what they're writing off.
Okay, we have three more questions, okay. I can back there.
I have two questions.
Okay, go ahead, what are they?
One of the ET numbers.
The what?
They can buy with ET numbers instead of having all sorts of.
Oh, because you came late, ITIN numbers, right? No, they cannot buy with ITIN numbers.
No, we don't do I-10, but we can do the one social security card that says the words on it for work authorization only. And then there's another step. Once they do that step, they'll get a new social security card that says just no words on it. But as long as it says for work authorization only and they have a social security number and it's got to match, it can't be borrowed from somebody, which does happen frequently. Somebody will give their friend or relative their social security number so they can get a job. So when it
What's your-
doesn't match, we're done.
Okay, what's your next
My
question?
other question is that what the lease the land, what benefit, what they have, what they cover,
What covers what?
lease the land, the park.
The land lease, what it covers, that depends on the park. That depends not on the loan, that depends on the park. Do you want to know generally what it covers?
Yeah.
Do you know that? Because I know that, but
It's usually covers a sewer, some improvements like in the park. It might cover like the main areas. Every once in a while, I found a park that had basic cable, but usually it's just sewer and trash.
just like
and then-
HOAs.
Yeah, and just like benefits, but for using the party room, or what do you call it? Not the party room.
The
Common room.
recreation room. Okay, you have,
Common room or recreation, yeah, they'll let you rent it out, put a small deposit, and if you clean it exactly the way you're supposed to, it looks like it did when you walked in, you get your deposit back. So
Mhm.
that's a benefit too.
Okay, we have two more questions. Go
Yeah,
ahead.
I don't know if relating to you as a lender, but if you buy it as a second home, can you rent it out if you're not,
That
using it?
DC.
That's a park requirement, and a
Yeah.
lot of parks will probably tell you no. Check with the park first and make sure they're okay with it. Most would be like, no, we're not doing that.
Okay, Yvonne?
Closing costs, can we go through that again?
Okay.
What's out of pocket? Because you said a lot of them are financed and so.
Yeah, there's
besides
3
down
things that are
payment.
out of pocket. Well, besides the down payment. So down payment, obviously out of pocket, and we don't have to season it. So if you had mattress money, 15,000 in your bank, deposit into your account as long as it's not pending because it's cash, it shouldn't be. I need a recent bank activity showing that you have the money in your account. I need a letter with a date and a hand signature, whom it may concern. The money I deposited on May 1st, 2024 came from savings at home of $20,000. Let's say they deposit 20,000. I saved this money for 5 years to buy a home, and they sign it. So we don't have to season it either.
Okay.
What's the rest of the closing costs? That's what I need to know.
Yeah, assuming 200,000 sales price, purchase agreement. What's the average range of the closing cost for the lender's fee, lender's charge?
Okay, so all the lenders are gonna have different fees, but I figure about 90% of what I do does go to 21st mortgage. Because they're more lenient on the credit, they're more lenient on the DTI. So if we're looking at them, what they do is the three things that are not gonna vary are gonna be these. Escrow fees, well, they kind of vary too, but we put down 800, but let's say you chose an escrow company that charges $1,000. We're gonna finance all of the $1,000 of escrow costs. If they only charge 600, we'll finance 600. So the other variable is gonna be the $8 flood cert. That's what they pull to make sure it's not in a flood zone. $200 HCD fee or less. Usually it's 200. And then the other two fees are gonna be the processing fee, and then it's gonna be the lender fee. The lender fee is 1% of the base loan amount, and the processing fee is 3.75% of the base loan amount. So and those are all financed. Those 5 are financed.
Do you have a question?
Yeah, if the borrower dies prematurely, before the end of the term of the loan, can the heirs rent out the property?
If the buyers die, can it go to the heirs, the loan, or is it payable?
Do they have to pay it off?
Well, okay, if you're talking about the loan part of it, number one, if there's heirs, they'd have to they'd have to change it into the heirs' names because they don't do double transfers. So they would start that process with the escrow company, get it changed over to the new heirs, showing all the documentation, showing that they own the mobile home. As far as the loan goes, they need to contact the lender, let them know what's going on, tell them what their plans are for the home. So let's say they move somebody into the house as a relative and said, you know what, I just want to, I'll take over the payments. Well, the lender's not going to let you take over the payments. They're not assumable in that fashion, but you could apply for the loan, pay off the current balance, and then you would have your own loan. But, and then I'm not using rental again, but rentals are always at the, discretion of the park. That's nothing to do with the owner at all. It's, it's the park, or the lender, I mean.
Any more questions?
Phone number and email address, Kathy.
Kathy,
yeah,
you'll have it. Yeah, we'll give it to you.
Okay.
Yes.
Okay.
Anything else? I think
Well,
we're good.
Okay, the only other thing I would tell you guys, if you guys want the welcome email and application, just send me an email. She'll give you my email address. It's really easy. My name and my company name at gmail.com. What I'd like to do is have you guys have that so you're ready, whether it's after hours, it's on the weekend. It's got really good information about mobile homes that we've gone over. You can forward to any client at any time, copy me back into the conversation, and then introduce me and I'll take it from there. Now,
So-
my work hours, go ahead.
Kathy, they register, so I'll send you all their information.
Okay.
If they all register, through then, I'll send you their information and then you could do that letter. And we're recording this, so I'm sending them also this recording.
Okay, sounds
Okay.
good.
All right. Anything else?
Okay.
Okay,
I'm
Yvonne.
sorry, go back to, so out of pocket is my down payment. And
Taxes, insurance, and appraisal. And appraisal is $450.
And home and inspection.
well.
Well, we don't require home inspection. We don't
Yeah, I
require
know.
termite. So if you get those done, yes, that's definitely an out of pocket, but we don't consider it because we don't require it.
Yes. Good. Well, thank you, Kathy. I think they got a really good idea. Wait, how long of an escrow do they need?
Typically, they're 35 to 40 days. Once in a while, we can do a perfect one in 30. But I always tell people 35 to 40. If we can close early and everyone's agreeable, we can close early. That's the whole point, to close as early as possible. that works for the buyer and the seller.
But I want you to know that the loan is important, but more important is getting the park to agree that they are allowing this person to buy this mobile home, right? Because they could
Absolutely. That's why
disagree.
we don't order that appraisal. We want to
Mhm.
make sure the park is okay with everything. Because I mean, I understand doing a home inspection first. In my mind, you want to make sure that there's no major damage that you can't deal with. The appraisal is just basically making sure that the comps, purchase price were all correct and that the asset the bank now has is covered by the loan. And typically we're not off. I mean, every once in a while I'll get a short one and it's usually minimal. They adjust the purchase price typically, and then we move on. So that's important. Park approval, park approval.
Okay, we have two questions now. Go ahead, you had a question?
Before close the escrow, all the part required repair, that have to be done before closing?
Yes, I can answer that, but I'll have her answer. It says all repairs must be done before you close escrow.
Yeah, they have to be done before Park's gonna say they're gonna close, because what they're gonna do is they're gonna call listing agent, or they're gonna call the buyer's agent and they're gonna say, hey, are you guys ready to close? Yes. The other thing they're gonna do is call the park. Are you ready to close? This is the park's pretty much only chance. If someone's been living there for 20 years and they haven't painted, the skirting's falling off, just whatever's bothering the park that they say, this is an eyesore. This is the time the park has to say, fix it. And it's typically anything outside, obviously. So, make sure the grass looks good and, something's, one of the sprinklers are leaking, and it's on their property, they might require them to fix it too. But usually it's not that big of a deal. They're just trying to make sure that the house is kept health and safety ready before they sell it.
Okay, Yvonne has a
Is
question.
that usually negotiated between, like, who's gonna fix it? Buyer and seller can negotiate who's gonna
Yeah.
fix it?
Yeah.
Same
Okay.
thing, yes. You guys will negotiate. Typically, the
But
seller
it
does in most
still,
cases,
yeah,
but not always.
it still gets intercepted by the park manager. though.
Yeah, and then on the tax and insurance, how many months of taxes do you need and how many months of insurance?
Reserves?
Yeah, for reserve, sorry.
They pay for 1 year in advance for the insurance, and it's 6 to 9 months depending on where we're at for the tax typically.
Okay, we have a question.
What about any restriction regarding the age or 15 year of the home? Let's say
Okay,
60,
so for me,
70s, 80s, 90s, you mentioned only part of the lecture, you mentioned about the 15 years. Is it affecting the loan process? 60s built in, like a 70 built in, 80?
I'm not understanding what he's
Okay,
asking.
so he wants to
Sorry.
know, like, you mentioned a specific, like a 15-year comment about the loan. Is there any other, like, what if it's 16 years or no?
The lender's point of view, they differentiate based on the years built in. Let's say 60s,
The age of the mobile home.
age of the mobile home. The lenders differentiate based on the age of the mobile home, like the 70s, 90s, 2000 built in.
Yes.
Okay,
They differentiate. We can go back to 1960, but 1960 to May of 76 is considered a pre-HUD. Most likely on the interest rate, you're probably going to pay about a half a point more for a pre-HUD, what we call an older home, than a home that was manufactured newer, let's say, the June 76 or newer. So if you have a newer home, you're going to have a better rate.
well, can you explain, I know that there's a year that they put on for it to be called a mobile home or a manufactured home? Or can you explain the difference?
Yes, that's what I was just saying, pre-HUD and
Hmm.
HUD. That's what we're talking about.
But
So
the
May of,
physical, like, is not like, what if they're up, it has a hook, the actual mobile home is because there is a physical difference on a manufactured home and a mobile home.
Mhm.
So does the bank look at that? Because I've seen them, a manufacturer, sometimes they don't have a hook, like you can pull them in your truck, right?
We don't care if they have a hook or not, but most of them, the hook will be under the skirting if they ever tried to move it. So the hook, the hitch would be under there. But for they don't really care about that. What they're looking at is what the age is going to be. So even if you remodel it, gut it out, and it looks brand new, the bones are still going to be a 1970 home. You still got a pre-HUD. So they're gonna base the interest rate on the age of the home, not particularly the condition.
Oh,
Does that make sense?
yes, yes, clearly. Yes. Well, I learned that today. Okay, any more questions? No? Okay, Kathy, then I'll give them your information, send them the link, and thank you so much. It was so informative.
Well, you're very
We'll give you
welcome
the-
anytime.
Thank you.
Thanks, guys.
All right, bye.
Bye-bye.
I don't know how to exit. Okay. Well, thank you. It was a quick, because it's mobile homes. And I will send you her information.
Okay, good.
And you guys could speak with her. I'm hoping it was recorded. I told them.
Yes, it's a big part.
Oh, okay, great. So it's recorded, so we'll send you that link and, please consider us for escrow. We definitely do mobile homes. And hopefully I'll see an escrow from one of you. Yes.
Linda, are we in the part of the recording?
Are you part of the recording? Yes. Is that okay?
I was kidding.
Oh my God. I'm like, wait, did I do something wrong? Yes,
You think,
but we don't know who you are because it's only the voice. You owe me 2 escrows. Okay, thank you.
Thank you.
All right,
Thank you.
Do you think videotape you and give us the feedback of this?
Oh, yes.
Can you take for us? If anybody wants to be taped and tell me that I use this for my Instagram, I like to let people know how much information I give. And please go into my website and look at those videos. There's videos about eviction, how do you serve a notice? A lot of people don't know how to do that. And if you don't serve a notice correctly, and you go in front of the judge, you gotta start all over. So that's an important thing to know, either for you to tell your seller if you're gonna get a listing of units. The 593 is the withholding. You know how they fill out that form? I don't know if you know I have someone from the IRS tax franchise explaining the 593 in my website.
What is the thing, 593?
593 is the form that sellers have to fill out in order to know how much they're gonna charge them on their profit.
Charge what? Sales charge
gains.
what?
The gains, thank you.
Oh,
Capital
Yeah,
gain.
the
capital
capital gain
gain.
tax?
What?
Capital gain?
Capital gain, yes. It's a very important form that you don't need to fill out for them. However, the fact that you have knowledge of it's important, right? Because, there's a lot of competition out there.
Escrow doesn't do it?
No, we don't do it. Escrow does not. Escrow just follows instructions. We don't act on anything. But because I'm in escrow, I realize how many agents don't know the 593. They've never heard of it and they've been in business for 20 years. So I'm like, okay, maybe we could talk about that.
That
So
was
you
really-
guys, yeah, you went to that
Yeah,
one, right?
that was really.
So that was recorded so you guys could,
So you have 1031 exchange.
we will have one that's coming up for a 1031 and also
But
one.
it's, your escrow has this service as well?
Well, we don't, we have the 1031, but we have another escrow company that holds the funds.
Okay.
But we
okay.
handle the concurrent sale and then we give the funds to this other escrow to hold it until they find that.
I see, but the escrow that hold the fund is not your company.
No, it's
someone
not
else.
our company. We don't
Oh.
hold the funds.
I see,
Preferably for us, that is different.
I see.
Yeah.
Is she talking about the accommodator?
She's
Oh,
talking
okay.
about the accommodator.
It's called accommodator?
Yeah.
Oh, okay. Does you work with that company a lot?
Yes.
or-
Yes.
Oh, okay.
We're doing it this year is 20 years I've been in business.
Congrats.
So, thank you. So, we definitely do that. But the reason we said this program is because there's a lot of people buying mobile homes right now. And there's a lot of construction on mobile homes, manufactured homes, because it's less expensive,
Yeah.
less down payment, easier to qualify.
Only the land is expensive.
The land is expensive, but they're starting to do it in the skirts of the counties, right? So it'd be a little less
Riverside.
expensive. Right? Yeah, Riverside.
The problem with, that I've been finding, because we're in escrow right now on one, the parks, space rent, hers, this is one of the cheaper one, is starting at 2,300, and it goes up every year.
Yeah.
So you can sign, and it's really kind of
Yeah.
crazy, you can sign, like a 20-year lease, and then, or a 15-year lease, or a 10-year lease, and the percentage that goes up is higher. So we talked to the park and she goes, look, there's no prepayment, there's nothing. So we're signing her up for the, at least only 4%. It's gonna go up every year, but there's no cap. So in 20 years, we figured out she's gonna be paying like $4,000. But there's other parks, I live in Huntington Beach and she was looking there, they're starting out at 3,200. And they go up every year. So just to let you know,
No, I know that.
because
And
I'm a
that's
state
great.
director. And so I'm a traveling director for you guys. So when I was in Sacramento this last time, our regional chair, I said, you need to bring this up. Well, it's really not real estate related because it's, what do you call it again? It's the HCD, which is like the DMV. So it's a little bit different. But I said, but something's gotta be done because you're getting into this mobile home thinking it's cheaper, but it's gonna go up every single year. Hers goes up, it was like, well, when I figured it out, the 5%, it was gonna go up like $110 the first year. Then you gotta figure it went up. So the next year it's even more. The next year it's even more, you know, and there's no cap on it. And because, you know, because of the statewide rent control, automatically now they're raising it because they have to stay within that rent control. Well, they can only raise it at the max 10% a year, okay? Well, normally a landlord wouldn't have raised the space rent, but because they're maxed out, now they raise it every year. And that's where the biggest problem for somebody buying a mobile
Well,
home.
mostly in the beach area, that happens a lot.
Yeah, but now mine is right over here on Lincoln and Bloomfield across the street from Forest Lawn. It's, yeah, right. Every year, the space rent is gonna be going up and they
But
change.
you can leave anytime you want.
Yeah,
There's
you
no
can leave,
commitment.
you can sign a 20-year lease, but you can leave at any time. You can break the lease and sell it. And that's what luckily the manager of the mobile home park told us. She goes, do the 20-year, you can break it any time.
And that manager literally has so much power.
Yes,
Oh,
yes.
It's crazy how much power it,
because if
I
that
went through
manager
it.
doesn't like you, you're not getting it.
yeah, you're not getting it.
If you have a land lease of 10 years, the breaking, what you mean by breaking?
If
is
I
you
wanted to
sell
sell,
it and then
If
leave
I
it.
wanted to
That's
sell
the
and I
way
can
the
leave,
breaking.
yes, I can break
Yeah,
that.
okay, it's not actually surrender, yep, breaking, it's a transferring to a new buyer.
Right, but then that new buyer, they don't start out at the space
Oh, you're
rent
not step
that
up.
I would be at. They're gonna start out high.
Oh, so they have to start
The
new
current-
contract.
Whole new contract. So, but she's right, that manager for that park, luckily, our lady talks really sweet. So she's got this big blue eyes, so her dog is actually like 60 pounds and the max is 30 and the park lady was like, it's okay. She's gonna he's a service dog and she's letting our lady do extra
Yeah,
things.
so she's nice. Yeah, there's some that are.
That are not nice.
I'm like,
And you really have to kiss their tush.
There's
You know, sorry to
The
say.
only thing I find out is more work than regular selling houses because you have to deal with the partner and the loan. Not only that, it's the commission.
Oh, yeah, the
Very
commission,
low.
they don't wanna pay you nothing.
Very low,
Yes.
very low
well, you know, you
commission.
have to consider that even though that's the case,
But,
that's really a lot.
And the north,
Yeah.
it's different.
Yeah,
I just saw a mobile home, that's the Daly City.
oh,
I
that's,
get,
yeah,
I get double 5%,
yeah.
200.
We're getting, we're selling this mobile home, we're getting $3,800.
Yeah.
You know, I mean, and the listing agent's getting 5,000 and does nothing. We've never seen her, nothing, and she piecemeals everything. I find mobile home agents, and this is just general in my opinion, they're not very good. At all. They don't respond.
I
They-
got, yeah.
They're,
Well, they're
they're
good. I
gonna
see
be-
a lot of people flipping mobile homes right
oh,
now. They buy them, they fix them, and they resell.
well, the
them.
one she's purchasing, because mobile homes are getting expensive. They're
Yeah.
200,000 to 300,000 now.
Mhm.
And luckily, she's getting this one for like 120, but it needs a roof, it needs a floor, it needs air conditioning, it needs, I mean, we've had all the inspections done, and it needs everything. But she's getting it for 120. And at first they wanted 150, and we're like, no, it needs everything.
I like to clarify on the age of the mobile home. She mentioned about, based on June 76. So if a buyer getting after June 26, they will get better rate?
Yes, because that's what she was saying, the pre-HUD is before 1976.
I have a question. So when we do the offer, for example, if you're representing buyer, you put subject to part approval. Does that, does that happen that if the part not approved, everything's gone?
Yes,
Like
yeah,
that, it's canceled?
Everything's done.
Okay.
And a lot of the park managers want upfront the home inspection and the showroom.
And also require about 3%, whatever you make it, the mobile home park.
And they also could say, you know what, I don't want a first-time home buyer here because that mobile home needs a lot of work.
Yeah.
I just want an investor to buy it.
Also,
They have the authority, which I
They
find
do.
like, isn't that discriminating?
But that's what I was just gonna say, we cannot discriminate,
Yeah.
ma'am, they do. If they
Yeah.
don't like you, that's it.
But in capitalistic society, they can discriminate based on the level of income.
Yeah.
Actually, my buyer applied to the one in the Irvine, they declined, the town manager declined based on lower level of the income.
Yeah, they could, I don't know, that's where I'm like, there's no regulatory,
No.
like realtors or,
Right.
there
Right.
isn't.
There isn't,
They
we
can do
have to
whatever they
really,
want.
right, we really have to watch what we say. Lenders, escrow, they really have to follow these guidelines. Mobile homes is like just out there. They can do pretty much what they want.
But I see some agents get really close to the managers and the managers just want them to list it. And I think also, there's a benefit, but that's how bad it is.
It just depends.
But they're not all like that.
Yeah, I mean,
They're
they're
not all like
not.
that.
No,
Yeah,
no.
you just have to,
We're
like,
just giving you like, be aware what you need to do when you
When
approach
was
one.
you expecting?
well, when I get done here, I'm going to the mobile home park to meet with the manager because they did an inspection and I told it's a year old. So I told the agent, I need a new inspection. Oh, that's all we have. Well, then on the inspection, it's like buyer needs to do this, buyer needs to do that. Well, wait, we didn't even negotiate on that. So I want to see, did they really get this inspection report? Shouldn't they do a new one? But the listing agent, I think the other night, it was like 11 o'clock at night. All of a sudden she's like, oh, I need this, and we're like,
11 o'clock at night.
yeah, we're like, where have you been? And yesterday morning, it was like 6:30. It was, what? But yeah, they're not the greatest. You just have to persevere.
Yeah,
That's it.
thank you.
Thank you.
Manager ask for income tax?
You have to qualify.
Well, they shouldn't because that's up to the loan.
Yeah.
But based on what he just said, they might be asking something
Right.
because.
Yeah, 'cause you have to qualify the
Because of what
income.
he said, the income, so they want
Yes.
to check the
Thank
income.
you.
Thank you.
Yeah, they do. They want to check your income. They want to know who's going to be living there. If you have a pet, you just have to get their rules.
I feel like they're more upscale.
About drug tests,
Huh?
drug tests.
Ranch?
Drug.
Drug test.
So if you want to take some food.
And if anybody wants to buy a ticket, let me know. I have my meeting.
Okay.
We never done.
I expect, Yvonne, I expect an extra finish.
Yes, ma'am.
I have been sponsoring.
I know, and you know I'm always here.
I know, I appreciate it because then it really, I have someone in the board that can say, I heard it. I heard
I'm
it."
always here. Yep.
It will take me all day, but I will
Yes,
do it.
yes.
Oh, no.
Oh, that's good. It's gonna be fun.
It's my lifeline.
Okay, thank you.
Register for the class now.
Oh, okay, don't worry, of course, thank you for letting me know that, yes, absolutely. I'll
Thank you.
send it. Please, use it for escrow.
Oh, is that right?
Yeah, I want you guys to use me for escrow, you'll be very happy, great
Okay.
service,
Sounds good.
thank you. Do you guys wanna take some?
Your card? I have.
Yeah, no, I should- oh, no.
I think a pencil.
Okay.
Is it the same?
Yes, please, we do a lot. Can you, do you guys, the two girls, do you think he can videotape you, you can say a little bit about the class?
Yes, we have a command inspection.
Oh, no,
All right,
we
now
can't do
next
that.
time, they always
Next time.
come. Yeah,
You always
they
come.
always come. I'll be here
Yeah.
for the reverse mortgage.
Oh, okay, am I doing, oh, no, I'm
Oh,
not
you-
gonna sponsor that.
Oh,
okay. That's too
Well,
bad.
well, we see you other times.
No, but you guys see me all the time. You
Yeah.
guys go, come to broker free?
No.
Thank you.
But I'll see you, but give me, an expert.
Yes, that's why I was trying to.
Well,
We haven't done mobile home, this is, maybe we do have one potential client.
No, but I do regular too.
Yeah, well,
Much better.
well, email and ask you about all those stuff, so.
Yeah,
that way
yeah.
You keep you in the books.
Yeah, keep me in the book,
Yeah.
because I'm very resourceful.
I worked with Proactive Escrow before.
Yeah.
I forgot what transaction, but I've done it. I think I actually went down to your office.
Well, I renovated, so you should go buy it.
Oh, okay.
So
I think
very
I think it was for a commercial property that I had a client buying in Hawaiian Garden.
Oh,
We went to
wow.
sign.
To sign the loan.
Person, no, it was cash offer.
Yeah.
We went to sign the escrow, instruction there. I was on Downey, yeah, I went there, I went there one time for Dr. John.
You guys work together.
Yeah.
Yeah, you're like-
Yeah.
Well, good luck on your.
Thank you,
picture.
Linda.
Yes,
Thank you.
Thank you, it was very good.
Thank you for the video.
Do you have that lady's information now? Do you have her phone number?
Yeah, I can.
Because my buyer is. I'm like, just hang in there. I said, let me see if I can get another one.
Okay, let me have your number, I'll send you something.
Okay.
So I can text you. Hold on. Let me get onto the text. Oh, okay, perfect. Okay, six, okay, what's your number? I will.
714
714.
381 5487.
714-381-5487. Fudge, that's a good roll.
381
714-381-5487.
5487.
I put 6. 05487. Okay, tell me if you got it, because then I know you have it.
Yes.
Perfect, that's all her information.
One thing about mobile homes, you only work Monday through Friday.
Yeah.
You don't work the weekend.
No, because they're not.
Thank you so
Yeah,
much.
because they're not there in the weekends, the
Mhm.
managers.
Yeah, that's, yeah. My husband's golf buddy just passed away on Friday.
Oh,
He-
I'm sorry.
He's our golf buddy, he bowls with us,
Oh.
everything, and he thought he had bronchitis. And he went to the hospital, and apparently the week before, when he was sick, he was having multiple heart attacks and had no idea.
Yeah, that's why having physicals are important,
Yes.
you know, EKGs as you get older. Lifestyle, you.
And his wife does nothing, like nothing. He treats her like a princess. She does nothing. She gave up driving. He drives her everywhere. She does nothing. And I don't know how she's gonna live. It's shocking to me. And that's why I told Krista, because Krista knows him too. And I said, how's this lady gonna survive? Because she does.
She'll survive, she'll survive.
She will, but she does nothing.
She'll probably get depressed,
Yeah.
that's what will happen. I'm sorry.
I mean, he does all the cooking, he does all the cleaning, he does the grocery shopping, he pays all the bills, he was part, you know, Catella Deli?
Yeah,
He was part owner, him and his brothers,
Oh.
yeah,
So sad.
yes. I think he was my age or maybe younger.
Life is short.
Yes, it is.
So thank you.
What do you want me to say? I'll just, yeah, oh, can I have a laptop? Okay, because I was just gonna get on my phone. Okay, good, thank you. Bill up my ticket.